Good morning, good afternoon, good day. Welcome to my weekend market roundup, 15th May 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel and Twitter handle. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use in my live trading. They run on TradeStation and Metastock platforms. I'll use the same systems today. That was the last slide. Let's continue with live system, starting with a study of the global markets. I'm using Q Global running on Metastock. We are starting with Australian Index AXJO. Australian Index pulled back little bit from the high. It is still in an uptrend, supported by trendline support in daily and weekly both. Friday's candle color is red, so we are not going to take any long trade, and it is in an uptrend. There is no Q trade setup. We are not going to take any short trade as well. It is in an uptrend. Let's see what is the trend for the Japan Stopics Index. At the right edge, it is not in an uptrend. It has lower highs and lower lows. Therefore, for short-term swing trading, Topics Index is in a downtrend. In a downtrend, however, it is already at the lower boundary level, displayed a bullish headwind, possible reversal signal on Friday. Therefore, we are not going to take any short trade, and though there is a headwind reversal signal in the daily, the weekly is not meeting the checklist conditions for a headwind reversal trade setup. Therefore, we will not take a long trade as well. Where could be our previous Q trade? It could be on this day, probably before the close of the day, using real-time chart, because by the close of the day, price was somewhat close to the lower boundary level. Instead of taking the trade at the close of the day, we could take the trade when it was going below the yellow direction line. I think by that time the flow color turned magenta. The weekly was already magenta for several weeks. So we could take a go with flow short trade right at this point, put stop above the recent high, and book profit the very next day when it hit the lower boundary. It is not in an uptrend, that is clear from the daily chart and also from the weekly chart. What about China's CSI 300 index? That is moving sideways. And amazing, isn't it? How the weekly trendline support that I pointed to many weeks ago, right when the market crashed somewhat in the China market, that weekly trendline support is still holding. In the daily, it is inside a sideways range. The range is not wide enough to take a box trade setup. On Friday, it has a bullish shape candle. The weekly candle is also bullish shape, bullish color. If we didn't have the trendline resistance, we could take a long trade. However, the trendline resistance is there. Therefore, we'll avoid taking any long trade. We'll wait for the sideways range to be broken. If we look at the weekly, it seems that it is going to go up from here. On Friday, the up move was with bullish pressure as well, but still following Q guideline, we'll wait for a breakout before taking any long trade. It is moving sideways for short-term trading purposes. Next, FTSE index, UK market. Very nice, isn't it? The trend line that I pointed to somewhere here, that trend line is still holding. On Thursday, price tried to go down, but very nicely recovered and closed above the trend line support. It also displayed an indecision at the bottom indicator that was also bullish, and on Friday price went up. The trend line is still holding. The weekly shape and color both are mixed. Looking at the weekly daily together, we might not take a trade in FTSE index itself. However, we could look into the constituent stocks, find strong fundamental stocks in robust industries, and try to take a low risk trade in such stocks at the close of Friday. It is going up. It is in an uptrend, higher high, higher low in the daily chart. And India's Nifty 50 still moving inside a range. In the last webinar, I showed how the headwind reversal signals that came in many of the market instruments in global markets as well as USA market, it could catch the top or close to the very top. And today you can see the trend line support and resistances work equally well. India's Nifty 50 is sideways. So what did we see? Australian market is in an uptrend, Japanese market in a downtrend, Chinese market sideways, UK market uptrend, India market sideways. So there is a mixed picture from global markets. What about the USA market? Let's look at that from Q Elite TradeStation. I'll use the market ETFs, starting with S&P 500 ETF SPY. The weekly trendline support held very well. I remember when price came to the low of the week, not everybody, most of the people were very bearish. That was on Wednesday's close. People were very bearish. However, I saw not only SPY, several other market instruments were also having trendline support. So I started to share buying ideas, in fact, from that point. That was useful because on Thursday and Friday, the market rallied. If we want to check the percentages from the high of this candle to the low of Wednesday's candle, the S&P 500 ETF SPY came down by about 4%. The third number from the bottom, it shows minus 3.93. So about 4% it came down. And if we see from this first down day's close to the Friday's close, how much is the distance? Only 0.4%. From the top, 1.5%. So let's revisit the numbers again. From the top to Wednesday's bottom, it was 4% drop. From this first bearish candle to Friday's close, it is only 0.4% drop. And from the high of the market to Friday's close, 1.5% drop. Not a big drop by any means. Considering the uptrend, it is not in not a big drop by any means. I saw in several people's portfolio they had a large drawdown because probably they were taking stocks that were not as robust, buying stocks that were not as robust as S&P 500 itself, as not as robust as in the last couple of months. Probably they might have taken a big drawdown. I started buying again from the time price came to the memory support level. That helped my risk management because the stop was very low. Now later on I want to come back and share that okay, I use the trendline support to buy. Did I have enough warning at the top to close my long positions or manage them at least, or take hedging positions using market ETFs? There were signals, alert signals. I shared them in several tweets and earlier YouTube videos. I captured those snapshots. We'll go through 5 or 6 of them today to see how one after another the Q systems get multiple alerts at the top that could help protect your portfolio. Before that, let us look at the other market ETFs. QQQ bounced up right from the trendline support in weekly, from near the trendline support in daily. So I saw at least 2 trendline supports on Wednesday that helped me to start taking long trades. Dia came right to the trendline support and went up from there. Again, that helped me to decide to start to buy. And IWM, it didn't have any trendline support. It was moving sideways inside a range, and that is continuing. It's very sideways in the weekly also. Let's review the other ETFs again. I was focusing on the trend lines. Let's see what is the trend. IWM sideways. Dia, we have to say it is in an uptrend. The trend line support is holding. QQQ, again we have to say it is in an uptrend, though Nasdaq may be weaker than SPY and Dia, but still it is in an uptrend in the weekly chart. In the daily, we see for short-term trading it is inside a triangle pattern. So it is also inside a range similar to IWM. And SPY, it is in an uptrend, no triangle, no box, so it is in an uptrend. So we have SPY, Dia in an uptrend, QQQ, IWM moving either inside a box or inside a triangle. That is a range bound move. Now let's look at other aspects of the market. Market ETFs are mixed, some in an uptrend, some in a range. Let's look at the mega cap top 20. How are they doing relative to the market? Mega cap top 20, part of Q global market breadth studies, is inside a triangle pattern. So it is also moving inside a range. Again on Wednesday, it came to the trend line support. Thursday, Friday went up. I was not going to buy this because there was a trend line resistance, but looking at the trend line support on Wednesday helped me to decide to start to buy some stocks. Mega cap sideways. Let's look at market breadth total view, and some interesting things will come out from there. On Wednesday, there was a distribution count of 3. And as I have mentioned earlier, no big market drop has happened without a distribution count of at least 2 or more. What are these distribution counts? These are the number of distributions in one of these indices, either the Nasdaq NYSE as a whole or S&P 1500, 500, Nasdaq 100, Dow Jones Industrials. if any of them have a distribution day, the distribution count becomes 1. If 2, then 2, 3, and then 3. So on Wednesday, I see distribution in NYSE, Nasdaq 100, and Dow Jones. On Tuesday also, Dow Jones had a distribution day. Remember, I mentioned earlier on Tuesday I took a short trade in DIA using put verticals. I took it at I took it during the day. At the end of the day, I found out the distribution there. Distribution was also on Wednesday. Then on Thursday, there was an accumulation count of 1. That was from DIA. So DIA recovered somewhat. And on Friday, we have accumulation count of 2. That is from Nasdaq and NYSE. That means very broad recovery. The indices, especially the large ones or even S&P 1500, the indices other than the composites didn't have any accumulation count on Friday. So the stocks that are in S&P 500, Nasdaq 100, Dow Jones Industrial, S&P 1500, they did relatively poorly compared to the broad NYSE Nasdaq. That gives you an idea what kind of stocks went up. And once you see that, we can keep that in our mind, that is it really a strong recovery? Maybe, but even if it is strong, we have to understand it is not, the recovery is not led by S&P 500, 1500, Nasdaq or Dow Jones. It is led by other less known stocks that are in Nasdaq NYSE. So that is something to be kept in mind. Another thing that we can observe from here, if I draw a line, see the percentage of stocks above 50 MA, it reached the peak here when we had an accumulation count, and after that it came down to 50% level. Let me draw again. Reached the peak at around 70% level, this current peak. Earlier it had been at 80% also, but the current peak was 70% level. Then it came down to about 47. That was a big drop from 70% to 47%. That means more than 20% of stocks came below their 50-day moving average. That is a large decline under the hood. And then it recovered. Now it is around 63 level, but still it is some distance away from the earlier peak. So this gap shows the stocks that could not go up to their Wednesday's level. Many of them are still below their 50-day MA. Earlier it was above 50-day MA. So that shows some damage done to the market under the hood, and that can be seen even from the percentage of stocks above 200 MA. So some stocks dropped below 200 MA and could not reach back to the level that was here. Now we'll have to see in the coming week, will it start to drop from here or will it go up and regain the previous peak, this peak. We have to see that. If it starts to go down, then we will look for short trades, and if it recovers, then we'll try to buy stocks. I'll not spend more time on the market breadth because I want to show the series of alert signals that came earlier. Let me close these charts. But before that, before showing the alerts that came, let's look at the other aspects. QH, market breadth study. Let's look at the bucket analysis. The percentage of stocks in the most extreme bucket. What is the alert level? 30% or more. It did in fact reach 30% plus, and I captured the snapshot. I will share that today later. That was an alert signal. Then it dropped from there, dropped very rapidly. And when it reached 30% level, the stock sector industry advanced decline breadth was very bullish. Even on such a bullish day, using the alert helped me be cautious and protect my profit. Another alert comes when the percentage of stocks in the extreme bucket jumps by 10% or more. That alert also came on the same day. So these two factors helped me protect profit, manage my long positions. What we see now? Now the percentage of stocks in the most extreme bucket just 5.7%. It has long way to go before it becomes overheated. And we see a big jump in the percentage of stocks above mid bucket on Friday. In a single day, jumped from 46 to 61. So 15% of all stocks crossed the midline. It was earlier to the left side, and now 15% of stocks moved to the right side on a single day. And we saw earlier that move was led by less known stocks, broad NYSE and Nasdaq. Friday market was very bullish. Let's look at the very useful chart. Remember in the last webinar, I mentioned when 1 day and 2 day periods were red, I mentioned that it had happened earlier that they turned red only to turn green. That happened again. They turned back green 1 day and 2 day periods. Sector advanced decline, industry and stock advanced decline. However, here we see the damage similar to what we saw in the broad market breadth studies, Q global market breadth total view, that several stocks could not recover back to above 50 MA or even back to above 200 MA. And we also see here the damage done in spite of the recovery on Thursday and Friday. 5 day period is predominantly bearish. 82% of sectors are still down over 5 days. 70% of industries are still down. 64% of stocks are down. That is not looking very nice. Though there was robust rally, broad-based rallies on Thursday and Friday, the weekly period remained quite bearish. That is why I mentioned if the market starts to drop from here, we may be finding go with flow short setups. 10 days that has turned bullish, and month 1 that was bullish for a long time. The concern is coming from the fact that the 5 day period has turned bearish now. Now we saw the trend line supports in the market ETFs are holding. Until they break, we may take some short trades, but we may be very cautious with short trades. If those supports break, the trend line supports, then I will be able to take shorts more confidently. Sector industry advanced decline, stock advanced decline is not giving the confidence to take long, and because Thursday, Friday both are bullish, it's not giving the immediate confidence to take short as well. But we can see the damage from there, and we can now see the finder picture, the balance between actual trade signals, weekly interval. We see the damage done there also. All signals is mixed. It's not bearish, but all signals, you can say 50-50, neither bullish nor bearish, large number of strength signals, that was due to gap up opens, trend continuation more bearish than bullish. That also supports the idea that if the market drops from here, we'll take trend continuation short trades, that will be go with flow short trades. Reversal signals are 50-50. Overall, the weekly picture is balanced and daily is very bullish. 96% of all signals on Friday were bullish. Strength signals 98% bullish. Continuation 97% bullish. Even reversal 89. It is bullish and maybe it is a bit too bullish. It is not common to see the second recovery day after sharp drop to have such large percentage bullish signals across the board. Not common. And whenever something uncommon happens, we may take note. Also, the fact that the percentage of stocks that gave bullish signals from pendulum high is more than 50%. A healthy bullish move gives most of the bullish signals from the yellow zone, and when the most bullish signals come from the green zone, that may be getting overheated. That is also a concern. That is a concern, and this extremely, I should say, not even very, extremely large bullish percentage across the board on technical signals is also somewhat unusual. And let's look at the weekly bearish headwinds. That is also a concern. In spite of the rally, the number of bearish headwinds in the weekly charts is remaining noticeably high at 95. That went higher, of course, before, I think crossed 200, but still even at 95 it is not negligible. So those are some alert signals, not telling us to buy a lot of stocks, though I did buy some with very low risk entry points. I will share them. Now that we have gone through these different aspects, let's now review the different alerts that came from the market, from the Q systems, right from this day onward. What was that day? That was 10th May. 10th May. And let's see from 10th May morning onwards what signals came. Of course, I pointed to the different bearish headwinds that came earlier, not only in SPY but other market ETFs futures. And on 10th May itself, we had a bearish headwind, but that was not the only alert. And let's look at the alerts one by one. I'm trying to open the files. Where are they opening? Wait a minute, it may be opening on another monitor. Yes, on another monitor. This is a picture from QH, 10th May, 10:55 a.m. So let's say around 11 a.m. The sector industry stock breadth was bullish, quite bullish, you may say. 82% of sectors were up, 9 sectors were up. But see what I pointed to at that time, the percentage of stocks in the uppermost bucket went to 32.5 in real time. Because this bucket analysis, just like other Q systems, help us look at the market in full real-time mode, we could be alerted about that. Also, the percentage of stocks in the extreme bucket, it jumped from 20% or so to 32% in one day. That was a jump of more than 10% in one day, and in actually 1.5 and 9:30 market open. So 1.5 hours. In 1.5 hours, percentage of stocks in the most extreme bucket jumped by more than 10% and it reached the overheated level. That was an alert that helped me, and that probably helped you if you are having access to the systems and if you are using them. Now see the same picture from QH, same day 10th May, but this is after the close. The percentage of stocks in the uppermost bucket came back to 10.4. Remember, it was above 30 when it reached the alert level, and the same day closed at only 10.4. In fact, it was worse than previous day, which was higher. And the market breadth, of course, turned bearish. But the alert didn't come from market breadth. Alert came from the bucket analysis, the extreme bucket percentage hitting more than 30% and one day's gain jumping by more than 10%. That was one alert that helped me. Now this is a picture from Q Finder, also 10th May's picture. And I pointed to few things. One is large number of strength signals followed by means associated with large number of reversals is a bearish signal, cautionary signal. Very many gap ups followed immediately by large percent of reversal is a cautionary signal. Same day it came. And I pointed to the large number of bearish signals, bearish headwind signals, 134. A large unusual number of bearish headwinds in Q Finder weekly technical breadth is an alert for a possible market top. Same day, 10th May, this is after market close. Warning 4. Same day, 10th May, after market close. The percentage of stocks giving bullish signal from pendulum high, 72%. That is not healthy. In healthy market, the most number of bullish signals come from yellow level. Here it was, today we saw it is high, but that day it was extreme high, 72%. That was an alert signal. Again, same day, 10th May. Now see what happened on Q Finder next day, 11th May. Large number of reversals after large number of gap up. And number of bearish headwinds jumped by a large number reaching 193. So the alerts that we had from 10th May, they already started to play out on 11th May. We still had large number of bullish strength followed by bearish reversal, and the number of bearish headwinds jumped substantially. It's 193 on 11th May. What was on 10th May? 134. So that was a big jump. So we are tracking 11th May now. Let's see the next chart. This is 12th May. Next day. See the percentage of stocks in the uppermost bucket dropped to 0.7%. Unusually low. And the market breadth is of course very bearish. Only 29% of stocks were left above the midpoint of the buckets. Only 29% here. And see the percentage of stocks in the lowermost bucket, lowest extreme bucket, jumped to 26. That was also an alert. It jumped from 1 to 26 in one day by 25 percentage points on 12th May. That was an alert that maybe it is becoming an extreme to the lower side. that is 12th May. Let's go back to the chart. This is 12th May. And remember, that was the exact date when it was reaching near the trend line support, not only SPY, but we saw that in DIA, and I think we saw that in QQQ. So 3 of the market ETFs were hitting trend line support when bucket analysis showed that the percentage of stocks in the lowest extreme jumped by 25%. That was a sign of exhaustion. And that was the time I started to share buying ideas when others were very bearish, many of them. Let's continue with the alerts. I mentioned earlier the distribution count of 3 came, however it was near trendline support, so I was not going to short near trendline support. Next picture. 12th May, the number of bearish headwinds went up to 237, 12th May. Another picture. Okay, this is also another picture I shared. This is from Q Elite. It captures the internal breadth of 6 indices: Nasdaq as a whole, NYSE as a whole, and then Russell 2000, Dow Jones Industrials, Nasdaq 100, S&P 500. Usually I use it with 5 or 10 minute interval intraday. On this day, it was a huge down day, and I saw that both up down volume, advanced decline, up down volume, advanced decline. They were hitting very deep levels, very low levels. And I looked back and I saw when all of them together, all the 6 together had such huge bearish day. And that brought me to this area. And I saw that after that price might have dropped a little more, but then it recovered for all the market instruments. So it was another sign of exhaustion that I anticipated, and again the trend line supports in 3 of the 4 market ETFs certainly helped me to decide to start to take some long position. So this is where I started to buy on the most bearish day. This is at a stock level. This is for LPX, and so far I was showing the market level pictures, market level alerts. Now this is LPX, Louisiana Pacific forest products related stock. It was on fire. I mentioned that. I shared this on forum sagarnandi.com, and I mentioned that it was displaying multiple bearish headwinds. If the trend line support is broken, we may be cautious. And when the market dropped, the trend line support was broken. Weekly had a very bearish shape candle with reversal candle at pendulum high. Weekly also gave a bearish headwind. So using the warnings from the bearish headwinds in daily, we could be cautious, and an alert trader could decide to book or protect profit right on this day when the bearish candle came with the signal, the bearish signal at the top. What could be done if options are liquid? I don't think options are very liquid here, but if options were liquid, one could sell call options here and wait for the trend line support to be broken before exiting the stock position. So at least some profit will come from selling the calls, and eventually one may close the stock position when the trend line was broken here. So these are alerts at the stock level using the Q technical signals that came earlier. We saw Q Finder gave in aggregate alerts on technical signals, and individual stocks gave alerts in terms of bearish headwind signals. Now this is a picture that I captured on the first rally day. No, sorry, not first rally day. Let me wait a minute, please. I check the date. 12th May. This was on 12th May. And I wanted to mention one thing. What was 12th May? If I go back to SPY, 12th May was this most bearish day. This day, 12th May. And I captured this to explain why I try to buy only fundamentally strong stocks. On that very down day, the most bearish day in recent weeks, maybe even months, the top 10 stocks in S&P 1500, which were we can find from QH what were the stocks, but see their fundamentals. In this picture, we have 3-star candidates here, value plus growth. Here we have value stocks. So all the stocks that were up, very few stocks were actually up, and the 10 best stocks on the most down day, they were either 3-star or 1-star value stocks. So why I like to buy fundamentally strong stocks, as I mentioned it, even if the market pulls back, the fundamentally strong stocks will pull back less, as is shown by this one-day picture of top stocks. And one of these stocks, in fact, one of these 10 stocks I identified and suggested buying, I think on that day itself. Now let's go to forum and let me check when did I suggest that stock, ENDP. I think ENDP. Yes, 12th May. 12th May, I suggested a stock ENDP. Again, 12th May was the most bearish day. On the most bearish day, I saw pharmaceuticals gained relative score, and in terms of percentage change, it was down earlier and it started going up on that day. Though the market was very bearish, the pharmaceutical industry was up by 1.5% and the score was 139. It was steadily going up. We have 147 industry groups, so it was near the very top. And QH scorecard shows the transition or industry rotation, transition of strength or industry rotation for pharmaceuticals. The color coding instantly shows it was one of the strongest, was very weak earlier, and it was accelerating as well. Fundamentally great valuation with a short squeeze potential. Most of the stocks in the industry were up, and the stock itself was up by, when I shared it, 8.5%. When I shared it, when did I share it? 11:25 a.m. in the morning session. For Q trading, we want to confirm the signal at the end of the day. Sometimes I or other traders take an entry using fine tune, but we have to confirm the signal at the end of the day. In any case, when I shared it around 11:30 a.m., then it was looking very bullish, and I looked at the chart. I saw the weekly is making a bullish shape candle. It is regaining the watermark level. In the daily, it gave a bullish headwind signal. After that, price drop, but as of that time, it recovered the watermark support created by the bullish headwind, thereby creating a false downside breakout. It had a bull release signal and bullish pressure. So using this, I thought that it may be a buy candidate, but of course we would have to wait till the end of the day to see how it closed. And let's see ENDP, how it played out. At the end of the day, on this day 12th May it actually pulled back. So if somebody was taking an entry near the close, they would not take the trade on 12th May but wait for the next day, and next day they could enter using fine-tuned chart. I'm in the opposite time zone. I live in Thailand, so I took an early entry using fine-tuned chart and I am continuing to hold it. I have a small profit in the trade. If you see that on Friday it again went back above the watermark support created by the bullish headwind. So again I could start to identify buying opportunities and place trades on the most bearish day, because I had alert signals at the top that were bearish and I had signals at the bottom that were telling me that it may start to recover, which signals the trend line supports in 3 of the 4 market ETFs, and the fact that the percentage of stocks in the most extreme lowest bracket jumped by a huge 25% on 12th May. So I thought market was due for a recovery, even a small recovery, but see, I bought a stock that was fundamentally very strong and it was regaining the headwind watermark support, and the industry was also rotating in favor. So this was a stock idea that I shared, and I also shared 2 more stocks between 12th May and today. One was HMST. Let's look at the HMST. Initial post, it is important to look at the initial post to know what did I look at or what you could look at to decide to buy. This is my buy pick today. If the stock breaks above trendline resistance, that was on 13th May. 13th May, just near market close. HMST, Thrifts and Mortgage Finance, the relative score was steadily going up. It was one of the strongest industries on that day. The percentage performance was also going up. Excellent turnaround industry. I love turnaround trades, as you know. All the Q trade setups are swing trades, turnarounds in a way, because they try to catch swing low. I am fond of buying turnaround industries just like this one, and also I'm fond of buying turnaround fundamentals if I get them, or steady fundamentals is also good. So this industry was turnaround candidate, strong and accelerating. A 3-star buy in terms of fundamentals, great valuation, great earnings growth and revenue growth, not only in the last quarter but for several quarters. See the strength in the industry. 94% of the peers were up. The stock itself was up by 4.5%. Also pays a dividend of 2.3%. Makes money. HMST. And how was the chart? The weekly bullish, and I am also interested in stocks that right after earnings tries to go down and then reverses. This was such a stock. Once again, this was the earnings week. That was a down week. Immediately next week it recovered, and when I caught it, it was a very bullish shape candle, bullish color. That was in weekly, and in daily it closed right at the trend line resistance inside a triangle pattern, but very bullish shape candle. See here, after earnings price tried to go down but recovered, little bit pullback, hit the triangle bottom, go up, very bullish shape, bullish color candle, bullish flow, bullish pressure, reversal candle also. So those were all bullish signals, and I suggested buying if it can break the trend line resistance. How is HMST today? This one, okay, it's already HMST. It has broken above the trend line resistance. So I shared it on this day. If you used intraday real-time chart, the next day you could try to catch it at the very bottom. If not, you could buy it at the close of Friday Friday again had a very high volume, up day. Thursday bullish pressure, Friday very high volume. So the trade that I shared again, so far it is working. And on Friday I shared another idea. Let's look at the original idea first. The more you observe this 360 degrees analysis, the more you will start to see how different forces are coming together to give us high probability trades. Doesn't mean every trade will make profit, and we don't need every trade to make profit. We need majority of trades to make profit. This was something I shared on Friday, 12 noon. DQ, again a turnaround industry. You see the pattern in my trades. The semiconductor equipment industry was one of the worst performers over 5 days, 9 score over 5 days, and from there it went to 127. It was down by minus 6% over 5 days. In real time on Friday when I shared it noon Eastern Standard Time, it was up by 2.2%. And the rotation will be clear from the score. Very clear. Turn around candidate with acceleration. DQ's fundamentals, 3-star candidate again. Great valuation, great earnings growth for 3 quarters, even 2 years. Great revenue growth, 3 years, 3 quarters. Short squeeze potential, 94% of peer stocks went up. The stock itself was up by 7.7% when I shared it. When did I share it? Around noon. But I noted the earnings is due in a few days, 18th May. So that has to be taken into account when considering what instrument to use or whether you want to buy it at all right now. How was the chart? I mentioned in the post, if you read the post, the daily was not supporting buying the stock right now. The weekly was looking great. Remember again how I used the trend line supports from SPY, DIA and QQQ to decide to start to buy stocks. The same was true for DQ. It had excellent trend line support in the weekly. So what I did, in fact, if I share my exact trade, I saw fundamentals were very good, at least for my liking, very good. Industry is getting stronger, accelerating also. The weekly had trendline support, but daily was inside a triangle pattern. Until Thursday, it was dropping. Friday, it had a bull release signal, bullish day. That is about all. That's why I mentioned in the post the daily was not supporting buying a stock, and also the fact that earnings is due close by. But I wanted to take a position, my personal choice based on the weekly chart fundamentals, industry strength. So what I did, I used the intraday chart, and when I take a position like this before earnings, I am ready to either close the trade just before earnings or I have to accept the volatility related to earnings. So I in fact took a trade, I think either right here or right here, don't remember one. I couldn't buy it when it broke out first time from early range high, didn't catch it that time. I waited for a pullback. Let me change it to 5-minute interval. Yes, so I could have bought somewhere here or here. Okay, I think I bought here. Okay, why I explain. I bought here and I bought it using stock. Before earnings, I could do short put also, but I was thinking the stock might go up considerably, which it didn't. After I bought, it didn't go up that much. But I bought it using stock. I was watching it, it was starting to pull back. I wouldn't know that at the end of the day it would go up again. So when it started to pull back, I sold a call for every 100 shares, thereby making it covered call which is exactly same as shorting the put. So I bought the stock. If the stock continued to go up, I wouldn't sell the call, thereby maximizing my profit potential. But the moment it started to come down, I sold a call, effectively making it covered call, which is same as shorting the put. So in the end, I am staying with a, you may say, short put or covered call, same. The risk profile, reward profile is same. Now, what is the difference between that and initiating it as a short put in the first place? The difference is that if the stock continued to go up, I would not have to limit my profit to the premium amount of short put. I could let the stock run. But the moment I saw it may come down, I made it a covered call, which is actually a short put. Short puts before earnings are attractive if you are willing to hold the stock whatever be the earnings result, because the volatility is high. So I am having a long position in this DQ also using that technique, effectively having a short put. So I am having 3 long positions: DQ, ENDP, HMST, all bought when everybody were pretty bearish, at least the first two, ENDP, HMST. First two, everybody was bearish DQ on Friday, and all of them are in a small profit. I think we are near the 1 hour point. Though I bought 3 stocks, if you look at them again, DQ, the stock that we have on the chart right now, I am ready to hold it through earnings. So this is not a typical Q swing trade. We don't want to hold a stock through earnings, but for some reason I want to hold it. So that I'm holding. It's a discretionary trade, not a typical Q guideline trade. The other 2 trades, if you see, ENDP, it's a pharma stock, defensive sector, and my stop is not very far away, not very close also. I took the trade somewhere here, not at the close of the day, but somewhere maybe here somewhere. My stop will be below the recent low if I want to close it once price drops. But I intentionally looked for a defensive sector when I bought it, because I bought it on the most bearish day, 12th May. And HMST, this is different. This is breaking out. So this is looking strong in daily and weekly. Here the stop is just below the trendline support. That is a Q guideline trend. So these are the 3 long positions I am holding. I don't have any short position now. Let's end today's session here. You could see how the Q systems alerts helped me to protect my long positions at the top and helped me also to decide to start to buy some stocks at the bottom. I will wait to see what the market does on Monday. I will wait to see if it is continuing to go up. If it is continuing to go up, in fact, if I look at SPY, just take one more minute. I have 3 long positions. If it starts to go up, I am not going to buy more positions. I would rather try to book profit, at least partial, in the existing positions, because I see it is going to hit the bearish headwind watermark resistance level, not only in SPY, in several other market instruments. I would look for shorting from there again. That is my technique, trying to short the top, buy the bottom. Now it is already reaching the previous stop. If it goes up on Monday, I will not look to buy again. I have the positions open. I'll try to book profit in them. On the other hand, if it starts to go down, we saw from Q Global Market Breadth and from Q Finder that we could actually get go with flow short setups or maybe breakout short setups also in individual fundamentally weak stocks. And as I mentioned, I'll be more comfortable taking shorts if the trend line support is broken in the market instruments. then we'll be more comfortable taking shares. That's how I'm going to look at the market next week. I'll keep on sharing my analysis on Twitter. Let me end today's session here. Thank you for joining. I look forward to seeing you in my next session, most likely Wednesday. I'll try to have it at 8 a.m. Eastern Standard Time. I'll announce that on Twitter page, and if you are subscribing to YouTube channel, you will get the notification from YouTube as well. Thanks a lot once again. Keep safe, and as I always say, no reason not to do that. Trade profitably.